How private property investment destroyed social housing in the UK. The uncomfortable truth. For decades, the UK has been told that the housing crisis is about not building enough homes. But that's not the real story. The real story is this: private property investment has quietly dismantled the UK's social housing system. One policy, one sale, one financial product at a time. Today, housing isn't treated as a human need. It's treated as an asset, a speculative investment, a wealth-building machine. And social housing, once the backbone of affordable living, has been pushed to the edge of extinction. Let's break down exactly how it happened. The Great Sell-Off: how social housing was emptied out. For most of the 20th century, the UK had one of the largest social housing systems in the world. Then came Right to Buy. Millions of council homes were sold off. Councils were banned from using the sale money to build replacements. Private landlords bought many of those homes and now rent them back to councils at 3-4 times the cost. This wasn't just a policy. It was a transfer of public wealth into private hands. And the result? A shrinking supply of genuinely affordable homes, replaced by a booming private rental market. Financialisation. When homes became investment products. In the last 30 years, housing has been transformed into a financial asset class. Investors, from buy-to-let landlords to global funds, treat homes like stocks. Buy, hold, extract rent. Watch the value rise. This pushes up land prices, house prices, and rents, making it nearly impossible for councils or housing associations to build new social homes. When land becomes a speculative asset, public housing becomes unaffordable to build. Developers don't build social housing because it's not profitable. Private developers dominate the UK construction market. But they don't build for need, they build for maximum return. That means luxury flats, high-rent build-to-rent blocks, affordable housing that's still up to 80% of market rent. And when councils ask for social housing in new developments, developers often claim it will hurt profits and negotiate their way out of it. Profit wins. People lose. Councils now rent from private landlords, at massive cost. Because social housing stock has collapsed, councils now spend billions renting temporary accommodation from private landlords. This is the most absurd part of the system. The government sold off social housing, then now pays private landlords far more money to house the same people. It's a cycle that drains public budgets and enriches private investors. Affordable rent replaced social rent, and prices exploded. True social rent is based on income. But affordable rent, introduced in 2011, is based on the market. And when the market is inflated by investors, speculation, and scarcity, affordable becomes anything but. This shift quietly eroded the entire purpose of social housing. The rise of private social housing investors. In recent years, private investment funds have entered the social housing sector. They buy properties, lease them to councils, and charge inflation-linked rents guaranteed by the government. It's marketed as helping vulnerable people. But in reality, it's a low-risk, high-return investment product. Social housing has been financialized, again. The result: a system designed for profit, not people. Today, social housing waiting lists are at record highs. Temporary accommodation is exploding. Private rents are unaffordable for millions. Councils can't compete with investors for land. Developers prioritize profit over need. This isn't an accident. It's the predictable outcome of treating housing as a commodity, not a public good. The UK didn't fail to build social housing. It was dismantled. The destruction of social housing wasn't caused by laziness, incompetence, or lack of demand. It was caused by policy choices that favored private investment over public provision. When housing becomes an investment strategy, people become collateral damage.